Hi there, guys. Testing 1, 2, 3. I've not started yet. Hi there, Alfred. How you doing? Give me a second. I'm just about to start. Okay. How you guys doing? All good? Alfred, how you doing? Hope you have had a good weekend. Okay, so I think we can straight jump into it. Sorry about Friday. I was not feeling well. I'm still, having all the coughs and stuff, and you can probably hear my voice as well. Not 100%, but I'm feeling better, much better. It's just the voice side of it. Okay, so we will start. There's a lot of movement going on. A lot of people have actually noticed the drop in gold prices and everything else. So first and foremost, welcome to today's Bretton's week ahead webinar. Today is the 9th of August 2021. So we'll go through a couple of things, especially the week ahead, meaning that we'll look as well into what has happened the past 24 hours. And also what to expect for the whole week. What are the trade ideas and trade signals that are available? Mainly fundamental as well as technical factors. So we will look into marrying both fundamental analysis and technical analysis. Fundamental meaning from the news, from economic data releases as well, and what to expect from speeches, risk events, and various other things, and marry that up with trend in the technical analysis side of it, and look at whether or not we can actually find trading opportunities for the week from short, medium to long term. Okay, so let's get going. So basically, got a lot of market jittering about a little bit in between, confused, a little bit of panicking, a little bit of this and that. So it's a bit of a mixed type sentiment all across the board. We've got very unpredictable moves as well, but not really shocking or overly surprising of why it moved that way. Like, for example, with gold, it has already been expected that they were not sure what would actually happen from the ADP side of it, employment as well as treasuries and all that. But suddenly, it jumped up a lot with the NFP figures, so that sort of brought down gold prices. But then, it is quite surprising as well, because there was a decoupling of what went on in the US. Usually it's negatively correlated, right? And then it broke off and followed the same path, and then now it went back again to the correlation again. So this is why correlation is very unpredictable. It's not really unpredictable. It is predictable in a way, but it's the timing that is unpredictable. Okay, the timing of when it might break off and come back again, like what's happening with gold and the US dollar at the moment. Okay, so let's give me a second. Okay, let me put this down. Okay, so basically what we're actually looking at is there's been a lot of focus on gold as of Friday. Friday itself has already focused on gold, and a lot of news have also given the floor of where the gold might actually drop to. So this is mainly because of, as you can see here, it says break 2021 floor as Fed policy speculation hits up. So this is where, we see a lot of movement to the downside. But the thing is that technically, we will look at the level that it has. Yes, it has dropped, but it's already at the floor. It's already at a level where it might find support. So this is where, we don't want to get trapped and tricked into selling more at this moment of time. So we will take a look at gold's prices. Here you can see on NFP's reaction to NFP. We have seen the Dow Jones have actually risen. We are looking at possible recovery in the Australian side of it, but still very, very sensitive, very fragile. What do you call that? What is happening in Australia with regards to Australian dollar stocks, Australian stocks as well. As you can see, ASX 200 may climb as Hang Seng Index falls to start the week. So this is basically that sort of correlation again between what is happening in the stock side of it in Australia is very highly correlated with what's happening in Hong Kong, in China as a whole. Okay, so that is it. And then we can see still on August 9th, you can see AUD USD threatens key technical level as Chinese inflation data nears. So this, you see the correlation between antipodian currencies, which are Australian dollar and also New Zealand dollar, or its economies in Australia and New Zealand are very, very highly correlated to whatever that goes on in both China and Hong Kong, but mainly China. So markets week ahead, as you can see, they are also focusing on Dow Jones, stocks, of course, gold, oil, dollar, yen, inflation, and COVID. So this is basically what we need to keep aware of as well. And then as of yesterday, Nasdaq 100 index forecast, they are eyeing the 15,300, which is very standard, this level. For the Nasdaq 100, for those who are trading Nasdaq 100, we are seeing that as well live on CNBC, Bloomberg as well. We have got this 15,500 and 15,300 as the talk of the town in terms of the level that they are eyeing for in terms of the upside of Nasdaq. Okay, so that is also something to look out for because everything has a ripple effect of what goes on there in the Wall Street side of it. Here you can see USD Mexican peso as of yesterday as well. It's a news that talks about how there is a Bensico meeting as well right there. And then we talked about Euro forecast as well, likely to hold, as you can see. So we want to focus on what we can actually see in terms of trend as well. So with that, I would like to also point out a couple of things to expect for the whole week, which currency pairs might be actually moving a lot with all these medium to high impact, especially high impact data releases or any events that are classified, categorized as high impact. So as we can see, we definitely will see a lot of movement that impacts the impact the US dollar as well, the Australian dollar and the New Zealand dollar, especially because we're talking about CPI in China. This has a lot to do with a lot of movements, even the euro as well, euro economy as well, but then to a large extent, Australia, New Zealand, US. Okay, so this is basically it. And we want to actually look at how these can actually impact. And in terms of volatility, I think we can find volatility in antipodian currencies. So we want to look for opportunities there as well. Commodity currencies in a way. So when we look into the potential of data or events moving in China, then we know that Australian dollar and New Zealand dollar could actually be in focus a lot in terms of volatility and liquidity. So we might find opportunities there. So once we find opportunities that are possible in Australian dollar and New Zealand dollar, then this comes under the category of commodity currencies. So because it comes under the category of commodity currencies, it might create a ripple effect to the other commodity currencies like Canadian dollar, the ZAR, the South African rand as well. So these are to look out for. And as of last week, we have had loads of news about how the price of copper has actually fallen as well. So that does actually impact all the manufacturing oriented countries, especially China, of course, also Australian dollar, Australia and New Zealand, as well as other emerging markets as well. Okay, so we see there is a potential, but in terms of the economic calendar for this whole week, it seemed to be quite weak in terms of being impacted by medium or high impact data. There's a lot of very low impact ones. It's only one or two. So we can actually see that it's China that's leading the way right there for an economic calendar that is high impact, which is the CPI only, and that is from China. So we know that it might actually be impactful towards Australian dollar and New Zealand dollar, but not so much other currencies. So we want to look at the heat map as well to see what has actually been moving. So on Tuesday, tomorrow, August 10th, we can see the same scenario whereby we have loads of medium data, low impact data. We've got some medium ones as well, but not so much high impact news. But what I can actually see is that sometimes in the different economic calendar might actually categorize certain news differently. So we want to also look at this non-farm productivity report, the unit labor cost report right here, because as of last week, we have had the Friday's NFP. So it all usually connects with all the reports that are sort of related, okay, or connected. So this is basically meaning that these two could actually become high impact. From medium impact could become high impact as well. So we want to watch for that, and not to think that this might not impact the market. It might actually impact US dollar quite a bit, depending on how the whole news gets spun in the market. Okay, so here we have got Wednesday 11th. Yes, we might impact the euro, especially because we've got Germany's harmonized index, Germany being the topmost country that contributes to the economy in the whole of the eurozone. So we've got three countries in the European zone, mainly Germany number one, second France, third Italy. Okay, so if there's any impact on these countries, it might impact the economy of the European zone or the eurozone in general. So here we have got CPI. So Wednesday at last we would have more of the CPI impacting the dollar. So we are looking at dollar coming into the picture to be more volatile, possibly more movements and opportunities as well on USD or major crosses. Okay, so Thursday onwards, again, we've got loads and loads of very low impact to medium data. We do have something that might impact the pound sterling, which is the gross domestic product, GDP. So that would probably be something that stirs the market a little bit, especially for the pound sterling or GBP. So Friday, the end of the week, Friday itself, it's looking not busy at all, except for just one high impact, more how we call that, consumer sentiment related data for the US. So there you go. We've got very selected movement. We might not be able to see exactly which currency may actually be impacted directly, but we need to make a lot of correlation. Like what I have mentioned earlier on, it is not giving you a lot of data for Australian dollar and New Zealand dollar, but I would expect Australian dollar, New Zealand dollar, and commodity currencies to be moving, especially because we have got China's news and high impact manufacturing data and stuff like that. So that would actually then trigger the movement of commodity currencies, which you cannot actually see on the economic calendar. So this is something that I would be feeding traders more on any other correlated trades. Also, we want to look at gold's position, because gold's position has actually moved because of last week's data and everything that has actually happened last week, especially on NFP figures. So we want to look at whether or not we will find gold going up or going down, and whether or not it will move at all to give us some trading opportunities. In my guess, it would move mainly because of China, and because China is creating that ripple effect to Australian dollar and New Zealand dollar. So Australian dollar, New Zealand dollar will create that impact again, or that ripple effect to other commodity currencies. And when most of the commodity currencies comes into play, getting volatile, then it will impact commodities as a whole. So it might be a commodities week. We want to look at oil as well. So there's not much big event that is going to impact oil, but because of the ripple effect of how commodities, commodity currencies, and commodities would actually come into play, might create some movements right there. So we want to also look at major pairs, and because of that, we might look into gold and silver together, and we'll see how it goes for the week ahead. But most importantly, let's look at the heat map and see what sort of movements has actually been going on, especially with top movers in the market, just to give us a bit of an idea of currency pairs as well. So as we can see on the daily chart especially, but I'm looking at the 4 dots here on the top 10 movers, we can see that it's coincidentally combine AUD with CAD as well. So here we want to also look at all the pairs that we have actually is still on hold, or maybe still pending, still floating as well. We'll take a look at that as well before we look into new opportunities. But I want to take a look more on AUD CAD, and I've mentioned about commodity currency. So you can see that in terms of clarity of trend, all four dots are on 4-hour daily, weekly, and monthly for AUD CAD, and that's the only one that is available with 4 dots at the moment. But we also want to take a look at the top 3. If you look at the top 3 itself, we have CAD JPY. Okay, it's got trend that is from the 4-hour daily and weekly, but nothing on the monthly. So it's got 3 consecutive trend. Looks like it's quite clear in terms of the trend, but majority are actually selling the CAD. So we can see that a lot of CAD has been concentrated right here. It's 6 out of 10. So you can see that it's a commodity currency as well. We want to also look at oil in that case, mainly because of the correlation between Canada and oil. So we want to look at oil's news as well. So hence the reason I've mentioned about the commodity type currencies and commodities moving this week, including gold, silver, oil, both UK and US oil as well. So then we can see that the top 3 is CAD JPY, NZD CAD, and also CAD CHF. Now, it's very interesting as well because we can see that the commodity currencies, especially with CAD, are all on the sell side. Majority of traders and investors are selling the CAD, but then they are actually buying the other currencies, and that does include safe havens. So we can actually see that the safe havens on the JPY is on the buy, the CHF is on the buy. So this does actually look like the market may be expecting some risk events, so might have some fear going in. So when the fear actually goes in, then they will pour into buying the CHF and the JPY. So if CHF JPY starts to pick up, and that would actually give more room for safe havens, that basically means that the market is expecting some movement to transfer the wealth and all that, buying gold and buying all these safe havens. So there is still not much negative news or something that is very risky, but I expect something might come in very soon because of how the movements are already, might be giving us some hints that there is a transfer into commodities, transfer into commodity currencies, and transfer into gold and CHF, JPY. So that might actually be a reason to believe that this week might actually have some news, some events, maybe on the COVID side, maybe unexpected type news that will actually drive fear into the market. So if we talk about fear, we need to also talk about the fear index, which is the VIX index. Okay, so the VIX index, let's look at VIX. Now, as you can see, VIX right here has actually fallen, not too much, but then it's fallen here a little bit. We are looking at gold as well, gone down. But the thing about gold is that we will take a look at technicals in a bit, that it didn't actually give me the body of the candle in various time frames, showing me that it might actually fall and fall much more. It fell down with the body of the candle, but then stuck at some point, but a very, very long wick. What does that actually mean? If you've got a long wick, especially in higher time frames, that basically means it's giving us the hint that it might be exhausted to fall further. And then we look into the VIX index as well. It's not a drastic type fall as well, because this is a fear index. We want this fear index to also go up, meaning that we will have sentiments of fear and uncertainty, which will basically drive prices of gold to go up much more, and safe havens like JPY especially to go up as well, mainly because of transference of wealth, and they are getting scared, so they want to actually put it into safe haven. So there you go. We can actually see that this area right here, we want this one to pick up as well, but it's still too early a day to actually look into this as a trend setter, not yet. because London hasn't actually opened yet as well. So okay, we've got the top three there: CAD, JPY, NZD, CAD, CAD, CHF. But then overall picture, a lot of focus on CAD and a lot of focus on current traders and investors are actually selling the CAD. So when they're actually selling and all that too early as well during the session, it could actually be just a sort of corrective move as well. So let's make sure first on the sentiment and on the trend whether or not it's a risk-off environment. It's looking like it may turn into a risk-off environment, meaning people want to switch off their risk appetite, become more careful, put more money into buying CHF, buying JPY, buying gold, buying silver. So this is basically what I see as a potential today, but it's not 100% accurate as yet because we want to make our decisions based on what is moving and what is going to pan out throughout the day and throughout the week. Okay, so let's get going into the currency heat map as well. Now, we have discussed all this and we haven't gone into the technical side. So this is all market analysis and trend analysis in a way, but you need to do a trend analysis as well once you get into the charts. Okay. So here you can actually see it's really clear. All these currencies on the left are looking like it is very bearish, moderate to highly bearish against the JPY. This is the clearest one. We have got lots of dark red here and reds. So that means it's not for the JPY, it's for the other currencies, very weak against the JPY. So as we go on, we can see USD here, Euro, all mixed sort of colors. But as we get into the JPY, we can see that the trend is getting a little bit more uniform. Okay, so we are having each column having more darker blues and blues, not so much mixed color like the other ones. So here we can see that JPY against CHF seem to be so we can see that the flow of risk could actually be in the Asian side much more, okay, mainly because they are putting their money into the JPY. So even with regards to CHF, JPY, it looks like it's stronger or much more bullish than the CHF. So I want to look at CHF JPY as well. Okay, CHF JPY. I've also written down AUD CAD and also CHF JPY. Also the other three, CAD JPY, NZD CAD, and CAD CHF. That's from the top three of the what do you call that, the top mover table. Okay, top movers table in the action forex, and AUD CAD as well, and CHF JPY. Okay, so CHF JPY seem to be interesting for us to take a look at, just to see technically as well on various time frame whether it would give us some nice opportunity to actually trade. Now we have got JPY turning very bullish with CHF and also with CAD. So CAD JPY is the top one in the top 10 movers of action forex. So that does make sense. It is giving us some hints now which one to actually pick out to analyze further. Okay, so that's basically it, because we don't need to pick out too many, mainly because if you pick just one or two, three that has very clear trend in various time frames, and the trend analysis is also quite good, and all the levels and everything else, then you can find correlated pairs as well with it, and then you go and analyze it further. So we don't need to pick out too many as of now, just we want good quality ones that we can be sure of its trend, number one. Okay, that's the most important thing. Okay, there we go. So we have done this already on this side of it. Just one last tool, which is the action bias. But before the after the action bias, I think it's also good to look at JPY and CAD's volatility chart. Okay, so here got nothing that interesting here on the action bias, but we can see that NZD CHF has got three consecutive what do you call that, time frames that seems to be pushing the currency to the upside. So let's look at, okay, NZD CHF, that one. Okay, this is to the upside. Also three consecutive time frame. Four is the best, of course, but Euro GBP as well on the downside. Okay, all right, there we go. So okay, we've done that. Let's just go on to volatility chart, and volatility chart right here. Let's look at which currency pair will probably be really volatile, but we'll look at JPY first. Okay, we can see that the GBP, the CAD, and the AUD seem to be most volatile against the JPY. Okay, also because we're talking about risk sentiment and all that, we want to also look at CHF. Okay, and that is with AUD in particular, especially on a daily chart, very volatile. Also, because we're talking about commodities, gold and all that, we need to also always talk about the USD and the major crosses, especially because it's got correlation with that. So we can see that the USD probably be most volatile against the GBP, the CHF. So remember, we have also talked about if we expect a lot of movements and trend for gold, it has a lot of correlation nowadays with GBP. So hence the reason it shows as well the volatility, and GBP is coming into the picture as well. So maybe GBP crosses to trade as well today. We don't know that yet, but we need to find whether or not they have the volatility, the risk events and everything to drive or fuel the market. If not, we'll get trapped into very sudden short movement, and then we think it will move more, and then it doesn't move at all, and then we get trapped in that. So we need volatility and liquidity to get into it. Okay, now let's get going into the charts, but I think the first best thing to do is to just straight away look into gold because of the drastic movement of gold. Now 1,600 is what experts are talking about in terms of the floor. Okay, 1,600. Now it is trading at 1,677. So that means if it wants to fall a little bit more, it could potentially at 1,600. But I'm looking at the daily chart at the moment, and look at how the wick, the long wick, has actually just telling us that it is really exhausted to actually go down much more. So again, it might actually be creating a double bottom instead. So look at all these area right here, very, very strong resistance at 1677 or 1678. Now it's already showing signs of exhaustion. Even if we go on to in the weekly chart, that is a very strong pin bar type pattern as well. And then if we go on to the monthly, the highest time frame as well, it does look like it doesn't want to go, the market doesn't want to go down anymore. So it's sort of marked its territory there, just above the 1677 area. So that is at 1680 already. Okay, so that is also sort of a psychological level by experts out there, not psychological level based on psychological numbers, because we don't trade using psychological numbers for gold. Not yet, at least. Maybe there is a way later on, and I will inform everyone once I have enough experimentation with psychological numbers with gold. So here we have got gold right now trading on 1746.35. So I'm just going on to the 4-hour chart, and as you can see, even in the 4-hour chart, it's already giving you hints of correction. People are buying, investors, traders are buying the gold already. So what I want to happen is I would love to look into hints once London Open has has already been more into their trading activities. Once they are open as well, is to look at the fear index, the VIX. The more the fear index picks up, then the more it would actually be giving us more hints of what would actually happen with gold. So what I would do, I think at this stage, is to start afresh, because it has actually moved so much and has gone out of the pattern as well, is to get rid of all this, and we do a fresh analysis for short term, medium and long term. So here, for example, we can see that if at all we are expecting movement to the upside at this moment of time, it is sort of within this capacity of this bullish candle right here that have actually happened this year itself in April. Okay, so if I get that to the weekly chart and I look at the current price, yes, we've got this mother candle here. We've got more movement to the upside the higher it goes. Okay, so we have also some support right here. Now, if I go on to the monthly chart, I can see that yes, we've got some other candle here, some other candle there as well. So I need to go now back to a lower time frame like the 4-hour chart, zoom out a little bit, and I want to look at, as of now, whether or not to the left of me, do I actually find any bullish mother candle or support area that I need to be aware of. Now, the answer to that is yes, it's actually sort of respecting this area at this moment of time. Give me a second. Okay, so here, for example, we have, let's say I've got a call coming in. Okay, so here, for example, there is a good and a not so good. The good is that, yes, it has some power to go up, but it's also at the same time approaching a resistant area. So I suggest it actually needs to go above the 1748 area in order for us to be more sure that it wants to go up a little bit more. Okay, so it will find some resistance right there, 1748 area, before it actually, you know, comes down again. So this is where I find it a little bit risky for us to straight away buy right now, but I think there are some good opportunities to buy a little bit later after London Open, especially, and after it has actually go across and go above 1747, above 1748 at least. Okay, so once it goes above 1748, then we've got more confidence of it, you know, starting to go up much more. But then at this moment of time, we don't know whether or not it wants to correct a little bit more first to find a cheaper base and then go up. So that is where the risk is. So also, as we go upwards, we need to also respect this area where the closing price, the opening price of the sell that has taken place at 1763 as well. So this could actually be a little bit of a border for you if you are actually buying, let's say, above 17. Let's say you start buying at 1748. Okay, 1748.50. Let's say if you're buying, make sure you exit at 1760 at least. So at least you've got some room there to play, just so that we are a little bit on the safer side of gold prices. Okay, so this is basically a short-term type plan for us to understand that we need to also respect certain areas, for example 1755 as well. So that basically means that you can start buying at 1748.50, let's say, for gold, but then make sure you exit at 1755 or 1754, then you buy again, and then you exit at 1762, let's say. Okay, so these are the levels right here. I'll just increase that, because I'm looking at the bigger picture. This is more a short-term type trade for you guys to actually look at. Okay, all right, so that is for gold. We will also look into a few other pairs at the moment. Give me a second. I want to start off with GBP as well. Gbp USD, also because GBP is very much correlated with gold. Give me a second. Let me just grab my phone if you guys don't mind. Give me a second. All right. Sorry about that. Couldn't find my. Oops. Give me a second, guys. Hi there, Tiravan. Good to see you. How are you doing? All good? All right. I'm just going to stop the share. Give me a second, yeah? Because I need to change the screen as well. Give me a second. Just need to pause just a little bit. Give me a second, guys. Just have to take care of something here. Right. Now we can do that. Sorry about that, guys. Let me share my screen. All right, we are back. Good. All right. Good to hear that, Tuvin. Okay, so let's get going. We are on GBP USD. See. Now, anyone trading the GBP at the moment, any GBP crosses or GBP USD in particular? I want to pay attention to GBP crosses as well, because when we are expecting moves with gold, we usually want to look at GBP crosses as well, because there's a lot of correlation. So especially with GBP USD, GBP AUD as well, GBP NZD, and also Euro GBP. So here, for example, we are looking at GBP USD trading at 1.3881. So it's basically trading exactly on a psychological level, which is basically not a good area to consider a buy or a sell, especially with a trend as well at this moment of time. It is actually in a sort of a sideway, not very clear with the 3 EMA lines as well. Okay, so it is not looking really good at this moment of time, but it might actually give us the hint of what might it actually do in correlation with gold as well, because at the moment, if we go back to gold, as you can see, it's exhausted to the downside, meaning there is maybe an opportunity to find support for it to go up. So something needs to come into the news to actually increase the fear factor, so that the price can actually start to find a correction and actually go up. So then what happens is we will then look into all the other currencies as well, of how it actually moves. Now, at this moment of time, it's actually looking like we can actually plan quite well with certain pairs trading this week. So hence the reason I want to also look at GBP. So when we look at GBP itself, does it actually show us that it wants to correct as well, coming down and not very good in the down market, but actually finding some excuse to be supported to go up? So it does look like it as well, and it does look like it is looking like it's got some support. It's already telling us it's exhausted to the downside. It found support right here. This is quite a a very strong support area, especially you've got the pin bar here, as well as this whole area of support. But then that pin right there found support at the 50 EMA as well, which is another sign that it's got a sort of a double bottom area. So again, it wants to push upwards. So I need the price to actually push and look into this area as well, because this is a support area. We're looking at the weekly chart at this moment of time. We have got some buying power that might actually end at the 3980s area. So I think there is about anywhere between 50 to 100 pips potential to go up, but then there is some risk as well. So let's go on to lower time frame and look at how much story it could actually do. Now, if you look at the 1 hour chart, GBP USD, not very good, because it has got this pin right here. It's already under it's looking like it might find resistance and come down. So what I feel that could actually happen within 30 minutes to 1 hour is for it to actually come down first, but then for it to find support, I would say at this area, at the end of this bearish candle right here, which coincidentally is also support of the bullish mother candle as of now. So that is at the 3866 area. So what I think it would probably be doing is come down to at least about 20 to 30 pips downwards to actually respect the area of 3850's psychological number, and then bounce back up again. So this is sort of the support area right there, but right now it is playing in within the candle, within this this candle at this moment of time, finding resistance already right there. So there is a room for the shortest term to still come down, play around this area, and be around anywhere between 3880s area and 3850s psychological level. So it'll play into a sideways market before it decides what to do. So if we go on to the 4 hour chart, we can then find that it needs to break out of the 3880. It needs to, in my opinion, it's probably best for us to actually wait for it to break at 3900 onwards. So I feel the best, safest price to actually start buying the GBP is only if it shows a lot of bullishness with bullish mother candle as well, to actually go above 3900. Okay, so 3900, it goes like this, and then here, and it goes like that, right? So 3900. Now here, once we actually go 3900 and above, then it could actually be much more to the upside. Now, as it goes above, let's say 1.3910 and above, then it could actually give us a lot more hints that it wants to go up a little bit more, right? My only concern is that it doesn't have enough power to the upside too much. I mean, it's not very confident in the short and medium term, but it's got more confidence in the daily chart, weekly chart, and monthly. Okay, so there is power definitely, but then we need to play it safely. So that basically means that, you know, I want to actually take 30 to 60 pips, 30 to 60 pips as the price goes up. But as the price goes up, after it has gone above 1.3900, because it might also find resistance and come down, and we don't know the nature of the news as yet after London Open. So it's probably safer if we set up a buy pending order only at 1.3910, and then 3910, and then we actually exit at 1.3940. So that's about 30 pips or so. Okay, that's for GBP US dollar. So that is probably the safest way to play with the GBP USD and with the current market condition at this moment of time. So this is basically it. There's definitely patterns right here. I won't talk about it so much, but there's like a Z-like pattern going upwards. There are possibilities, but I'm looking at all this resistance level, resistance area, and resistance area. So I am not sure as yet whether or not the news factor would actually be much stronger, much stronger to actually impact and push gold up, especially fear factor. If there's a fear factor out there that comes in, let's say in the next couple of hours, we have got more fear factor news is talking about the COVID or something that can actually bring the fear factor up, then we see gold's prices going up. Then there is a possibility as well for GBP USD to just burst out and pierce through all the big resistance area. At this moment of time, with regards to patterns like A, B, C, D and all that, it's a little bit too early. We want to focus on price action and trend first, and then we will polish the analysis up with the price pattern. Okay, we want to use it as a very, very nice dessert as opposed to the main course or appetizer. Your appetizer and your main course should always be in the trend analysis, market analysis, together with price action analysis and various other things, and then you polish that up and confirm it with trend. Okay, so this is basically probably the best way to go forward, especially in a very unpredictable type market condition at this moment of time. There are definitely potentials, but we are not sure at the moment with what's going on in the market, because we're expecting some news, expecting it, but what exactly we're not really sure. Okay, all right, so that's for the GBP USD. That's good. And then we want to then go on to okay. Right, that's for oil right here. We'll talk a little bit about oil probably in a bit of a later stage, because we have got some news as well that is expected, I think, by the end of this week. But then there's not much meeting going on and stuff like that. The Middle East is on its holiday type mode as well. People are on holiday and all that. This whole month of August is actually very quiet in the Mediterranean as well as in the Middle East. Okay, so here, for example, we are talking about Australian dollar versus the USD. I want to look at Australian dollar as well. As I've mentioned, we are expecting, a lot of movements with manufacturing numbers, data and all that of China. So that would actually impact antipodium currency. So this is where we want to also take a look at this. It is actually trading in between, not in between, sorry, in within the sell zone right here in this red box. So I think once it goes down a little bit more, mainly after it has gone lower than 73.50. Now it's trading at 73.51, exactly at the 50 psychological level. As it goes lower than 73.50, I think it would then confirm its weakness even more. And I think we will find loads of trading opportunity to the downside, especially with all these mother candles that we can actually find. So we've got some strong mother candles as well, especially even on the 4-hour chart right here. We can see that it has some opportunity of a sell to the downside, but I think after it falls under the 73.40 area, okay, under either 73.50 area or 73.20, these are the two psychological level. But the more it falls, the more the chances of us to grab some selling opportunities right here and some pips from selling, and the price could potentially go down and find support at the 73.00 and even lower areas. So we've got some chances to trade and make money anywhere between 30 to 50 pips in the first few hours of the day, potentially after London Open, but then more would probably be best to see after today, just to see whether or not it definitely wants to go down much more, mainly because we have got support area as well to think of. So we want to be careful with that. Okay, there you go. This is more like a head and shoulders pattern as well. We've got some shoulder there, shoulder, and then we've got a head right there. This is for AUD USD. It becomes clearer only if you look at it on the daily chart, and also potentially on the monthly chart, on the weekly chart as well. Head, shoulder, shoulders right there. But it's better seen in the daily chart right there. Okay, all right, there you go. Now we will look at CAD JPY because it was the one that we have basically in it. It's a lot of selling, of course, at the moment. CAD JPY, it is still very strong in terms of the pattern as well to the downside. I still have it basically on my personal accounts as well, still trading on the downside, still floating it as well. But it's got a large drop there expected. It has a lot to do with oil prices as well, because at the moment, for them to actually really push the prices of oil to the upside is a little bit challenging as well. So we're expecting a drop in oil prices, so that would actually impact Canadian dollar as well. From a patterns perspective, price perspective, what goes on in Canada as well. So still I'm holding on to this trade right here, and still I'm seeing a potential of it to experience a big fall, especially with CAD JPY. Okay. Also, if we've got more risk and then more traders, investors are pumping in the money into safe havens, then we are looking at JPY going up and CAD to actually fall even more. Okay, so we are looking at what news would actually impact that fall and bring down the CAD much more. And then this would actually be an ideal trade if that actually happens. Okay, so there you go. GBP JPY. So now at this moment of time with GBP JPY, it is still within a selling zone. It is within the selling zone. This is on a 4-hour chart. It is really difficult for it to go above and just go boom upwards as of now, mainly because GBP is paired with the JPY. So JPY, it needs to have the risk event, risk event to drive the JPY higher. So as it drives it higher, it will make the GBP fall even more. So that would actually give us more selling opportunities as opposed to buying opportunities. So at this moment of time, it's already given us the hint that it has stopped sort of the buying around here, right? And that is exactly at 153.05, which is at the 00 psychological level. Now it's really weak in terms of the body as well. It's given you that hint as well. So what we need is for it to actually fall to the 15290 area. So if it falls at 15290 area, it gives you a bit more hint that it wants to fall a lot more. But of course, as it falls lower than 15280, then you can actually have your sell price trigger and sell and start selling at 15270. So then it would probably be giving you more room to the downside, and then you can actually exit just before this area right here at 15258. Okay, so there you go. This is just your short-term type of what could actually happen. As it falls a lot more, then you are looking at more chances. But what I see is that GBP JPY has got this cup and handle pattern, and now it is just forming the cup, so it has to fall. Let's say at least about 50%. So it has to actually fall to the 152 area right here, which is the 50%. So it needs to make that handle if it is following this cup and handle pattern. Okay, this is for GBP JPY, guys. Any questions coming from your end? Because I'll be sharing trade ideas and putting it at the BKFX portal area as well for the ones that I've mentioned. Not CAD JPY, because that's the one that we already have the trade idea on, but NZD CAD, CAD CHF, NZD CHF, Euro GBP, and also, oh no, that was CHF JPY. CAD JPY, sorry, AUD CAD as well. So yeah, that's basically where I'll be releasing the signals for. Yes, we can. US 30. There we go. Now it has actually gone above and beyond that area I have mentioned as of last week, but still it is within a sort of bearish zone. So you see how it's heading downwards again. So that is basically what's happening with. Okay, it's weekly chart. It's actually a buy zone, but I've just colored it red if I'm not mistaken. Let's look at it from a fresh point of view. So we have a daily chart. Now on the daily chart, as you can see, it's just got a very nice flow to the upside, right? It's got nice flow of the 3 EMA lines as well as it goes. So what we need is to just watch out for resistance level. Okay, it's just that we don't actually have much of a reference point at this moment of time. If we cannot look to the left so much, right? So what we need to do is to then look at price action itself, but also to look at how these levels, we have the resistance level. Now the problem, the issue is that it is trading just slightly under all these 3 resistance levels. So it might actually want to correct itself and find a little bit of support. In my guess, it would probably be around this area right here that reflects there. So we have got a potential to come down a little bit more, but has already found that area at the 35. I think at 35,000 would probably be better. So 35,000 area would actually be an ideal place for it to actually find support before we see a potential for it to go up again. Okay, so I think definitely room for it to actually go up, but I would feel safer to actually for it to actually go up above the 35,207 area. Then you can actually find it a little bit more comforting for you to actually find room to the upside. At this moment of time, it might actually be wanting to correct itself a little bit more, find support at different areas, and then to actually go up. So it is probably best for us to do that, you know, for us to actually wait until price goes up above the 35207.36 area, especially that support area right there, the body of it. And then we look at the nature of the candle itself. If it is strong on the body side of it, and then it goes up much more, then it would probably be better for us. So I think it's best for us to let it go above the high that we can actually see first before we actually take any action to actually buy. Okay, but if we are thinking of selling, then we wait a little bit more as well until it goes a little bit lower. Then we can actually take the sell as well. So the sell, the most comfortable sell area, excuse me, is 34,956 and below to actually look at more room to the downside. But I think it's probably best for us to look at what prices will actually do. In my opinion, it might actually have some correction, but we don't know how far the correction is. So if we are buyers and thinking of buying and riding this trend, it's not the time to buy until it corrects a little bit more first to the downside and go beyond the 35207.36 area. Then we can take a look at the buy type position. Okay. All right, guys, that's basically it. Any other questions before I end the session? Only because I will be giving out the trade signals in the BKFX portal area for the ones that we have mentioned today. And also for any questions directly, just message me and with your screenshots as well. So that would actually help me out. Okay. All right, guys, if no questions, I'll end the session for today, and we will see you guys again on Wednesday. But meantime, any questions at all, just direct message me and we'll take it from there. Okay, guys, have a great week. Have a great tipping week. All the very best and take care. We'll see you soon. Bye-bye. Take care. Take care. Everyone, bye-bye.